Hello traders, welcome to another video on this channel. So in this video I'm going to be showing you how to do top-down analysis, and also in this video I'm also going to be introducing new terms, right? I'm going to be introducing new concepts that you are not yet aware of, that these big traders use to trade more frequently and make more money from the market that you are not aware of. So make sure you stick around, grab a pen and a paper while we get started, and before that make sure you hit that like and subscribe button. At the end of this video as well, I'm going to be showing you how you can deal with complicated structure, right? I'll be simplifying it in a way that even a newbie that is still new to SMC can easily deal with complicated structure. It will be straightforward to the point and easy. This will be the best video you have come across in all of your trading journey as compared to previous SMC videos. So make sure that you stick around. Before we get started, I want to show you the broker I'm using. It's called Just Market, right? So here, this is the broker that I'm using. It's called Just Market. Just Market is a very good broker. They offer reliable withdrawals and deposits, instant, and many funding methods. So make sure you check it out. I'll be leaving the link of this broker in my bio, in the description of this video. So make sure you check it out and possibly create an account. Before we get started, make sure that you leave a comment, right? I'll be picking two people from the comment section that I'll add them to my private VIP group, right? I'll add them to my private VIP group. So make sure you leave a comment, and the person with the best comment will win a 1 month in my private VIP group. So let's get started. So on the weekly time frame on GU, what we can see here is, okay, the market has been bearish. If I zoom out, just from looking at it, you can identify the direction of the market. You see that the market has been bearish. So starting over from here, we mark out our weekly break of structures. If we mark out our weekly break of structures, this is our weekly break of structure, right? And from here we will know that this is our strong high here. This is called strong high, and this is our weak low here. So from at this level, what we're anticipating from is for this weak low to be taken out. Now, as I said, I'm going to be telling you about new concepts that you don't know about, right? So now inside here on the daily time frame, you also see this break of structure, something of this similar sort here, this break of structures. Now once the change of character occurs somewhere around here, right, you start seeing this break of structures on a daily time frame. Once you know your weekly bias, you know that, no, if I start seeing this change of this break of structures on a daily time frame pushing market downwards, I can look for an entry there. So now if you want to mark out this break of structures here, these are called IBOS, right? IBOS, which are just the short form for internal break of structure. So these IBOSes are also very important, right? Because when you switch now from this weekly time frame to the daily time frame, you are going to see a lot of these IBOSes. Now, after mapping out all your weekly break of structures, you can then know the bias of the week. And what you need to do is you just simply switch over to the daily time frame. From the daily time frame now, because when we are coming from the weekly time frame, we knew that our bias was bearish, right? Now from the daily time frame now, what you see here is this was our weekly break of structure here. At this weekly break of structure, what did the market do, right? If you come back here, you see all of these that I've marked here. These are called IBOSes. These are daily IBOSes. Of course, you can use this concept in any time frame. You can see mark your main bosses on a daily time frame. You go back to the 15 minutes, you mark your IBOSes. That will still work. That will still work so long as you know where the market is going to. Now after after this weekly break of structure here, this is the weekly break of structure. If we see that the market starts creating high bosses to the upside, right, before our inducement here, this will be our daily inducement. If you see that the daily market starts creating high bosses to the upside, what you need to do is you follow the daily eyeballs and you buy. This is one of the ways that you can trade internal structure. If you see that the market has started creating eyeballs to the upside, you can follow the daily eyeballs and you buy. When you buy now, what are you targeting? First, our first target will be our level of daily inducement, which in this case is this level. As you can see here, is this level. This was our level of daily inducement here. So the first target is this level. Now once this level has been taken out, once this level has been taken out, you go, the next level that we are looking for is our decisional POI to sell from. That will be the next level that we are looking for. So if this level of our decisional POI fails, you can continue buying till the market mitigates your external order flow. Now coming back over to our pro trend, right, you see that as this was our weekly break of structure, we have daily breaks of structure here, and if you look here, you see that the market had been pushing up. This market had been pushing up here. Now if you see here, this is our last order flow here. This is our last unmitigated order flow here, right? This is the last buy move before the sell that was left unmitigated, because this was our last buy move before the sell. It got mitigated by this one. This was our last buy move before the sell. It got mitigated by this one. So you see that this is our last unmitigated order flow here. So once market tapped on this order flow, what we're waiting for is we are simply waiting for a reaction and a change of characters to sell. Right now, this is a GU chart. This is the daily time frame, the daily charts for GU. So what we are waiting for here is we're waiting for long sales. Now you see that GU, it gave us a change of characters somewhere around here, started selling. This is the daily change of characters, remember. So once this tapped into this zone here, you can also look for a smaller time frame change of characters here, maybe the 4 hours or the 1 hour change of characters, and you sell. But at this level, this is our daily change of characters here. So once it gives us this change of characters, what we are anticipating is for price to push back up to the our extreme POI and then sell off. So when price started creating internal high bosses, you see how these internal high bosses keep coming into play. When price starts creating these internal high bosses like the one we have here, you can buy. This another boss here, you can buy until this zone here. But first, right, you need to make sure that after taking out the inducement, you don't buy at the first POI after inducement, because this is called a decisional POI, right? It has a 50-50%. So if price reacts from that POI and you buy, then you are likely to get stopped out, because price can just continue to the downside. So after taking out the decisional POI, we wait for the extreme POI, which was this in this case. So this is what we're waiting for. We can continue buying till the extreme POI is mitigated, or till it gives us a change of characters like the case which we have here. This was our change of characters, right? The market did not mitigate anything. It just gave us a normal change of characters here. The trend just switched from being bullish here to being bearish. Of course, this is still I this is an eye chalk here. This is an eye chalk here. This is an internal change of characters here, right? So there is no need for you to say no, the market has changed direction. This is just an eye chalk according to the weekly time frame. If you look there, you see that this is an eye chalk here. Now continuing to the upside, you see that after market switch, change these characters and push down a little, market then switch back characters here and push up, taking out our, then mitigating this external zone here. So after market mitigated this external zone here, we're waiting for a change of character. The change of character had already occurred here. So what we're waiting for is for the market to push down. Now Switching over now to the 4 hours time frame, right? We already know that our bias in a daily time frame is market is coming from a bigger uh, POI, right? It's coming from a daily time frame POI, and the bias is already switching bearish here. The bias has already switched bearish here, because if you look here, you see that there's a change of characters here. So now you know your weekly bias, and you know now your daily bias, right? You know now their daily bias. Your daily bias was bullish, then it just recently switched bearish. So if you switch now over to the 4 hours time frame, if you switch over now to the 4 hours time frame, you mark your structure, right? You make sure you mark your structure, but keep in mind where your daily break of structures are, your weekly break of structure, and your 4 hours break of structure. You can trade any of them, but you need to keep in mind where those breaks of structure are. So switching over to the 4 hours now, what we have here is we have the market coming from this main supply zone here, the daily supply zone. So what happened here is this was our last break of structure. Market broke below it, and we now have a change of characters, right? So we are looking for prices to continue down. Anything here will be a retracement. If you want to trade this, you can use the eyeballs. If you want to trade the retracement here to mitigate maybe something up here, you can use the eyeballs technique, right? But from here now, you need to mark your last break of structure, which at this level, if you want to mark your last break of structure after this change of characters, it should be this one right here, this one right here. And this last break of structure, we had this zone mitigated by this move, and the moves push down. So what we're waiting for is for price to take out inducement and then push down. Now if we switch over now to the 1 hour time frame, right? If you switch over to the 1 hour time frame, this is where you can see more structure now, right? As you see here, these lows seem to be equal. So this low seems to be equal. So this is where our last inducement is. This is a zone where we consider as our last inducement, because if you see here, this zone is already mitigated, this one is mitigated, and also, yeah. So what we're waiting for now is for prices to keep dropping. You look for an entry and you wait for prices to keep dropping, right? So as I promise you, I will be showing you at the end of this video how to deal with complex structure for the newbies, right? So how do you normally deal with this? If you see structure maybe it's complex like this, what you need to do is you can use this tool here. You will try to outline the structure using this tool. After outlining the structure using this tool, sorry about that, I was not supposed to break this. It seems as if it's net off. So after aligning the structure using this tool, all you need to do is you just extract the structure. So if you extract the structure now, you can arrange the line and you mark out your structure from this line here. Once you map it out, then you can just move back the structure, or you move the markings and apply them on the chart the way you have seen it from your outline structure. This is the easiest way that you can learn as a newbie. So guys, that will be all for the video for today. Make sure that you have subscribed and you have liked, so we'll be bringing more content like this in the future. Stay tuned, hit that notification button so that you'll be notified when our next video is up.